Hi, good evening, everyone. Please confirm you can hear me.
Yes, we can hear you, ma.
Okay. Okay, thank you, Ma. I sincere apologies for the delay. But I think now we have everyone, not everyone, but we have quite a number of people. So I can say a message in the chat box. Okay, fabulous before now. Okay, so welcome again to today's Team101 session. As we've communicated earlier, our topic is how the Nigerian tax reforms affect you and your business. And pardon my manners, my name is Timluluwa Shotonwa, and I would be hosting the Team101 session today. So today we have two speakers, two experienced speakers, if I must say, and I will just quickly read their bios and have them, just say one or two things to welcome us as we start the session. So first we have Brother Damlola Dari. He's a manager in international tax and transaction services at EY Nigeria. He has broad experience advising Fortune 500 companies and early-stage businesses on tax, strategy, and operational matters. He has led large-scale transformation initiatives, built high-performing teams, and supported organizations with strategic planning, financial modeling, pricing, transfer pricing, and tax efficient structuring. He's known for navigating complex tax and regulatory issues. He consistently delivers practical, high quality solutions that drive business growth and operational efficiency. So please let's welcome Brother Damla, Brother Damlola Dari. We can send a comment, we can react with our emojis, but let him know that we're happy to have him around. Thank you. I see some. Yes, thank you very much. Thank you, everyone. So before I let them maybe speak as well, I'll just also introduce our second speaker for today, Sister Demira Kosibe. She is a senior manager in the Tax, Regulatory and People Services Division at KPMG. She has accumulated about 9 years of providing tax and business advisory services to clients in various industries and sectors of the economy. She has diverse experience in providing tax compliance and tax advisory services to clients operating in the oil and gas industry. So let's also welcome Sister Damilola to today's session. Thank you, everyone. So to our speakers, please, you could please turn on your videos now and just say something before we start the question and answer session.
Hi, good afternoon, everyone.
Good afternoon.
It's great to be here. Yeah, thank you for having us. It's great to be here, and we're just excited about discussing this new introduction of the tax laws and guiding businesses accordingly. Team 101. So great to be here. So thanks, everyone.
Thank you. Thank you, sir. Sister Dami.
Yes, good afternoon, everyone. Just like Daria said, glad to be here to provide insights as much as we can. So yeah, thank you.
Thank you, Ma. Thank you, sir. So yeah, we'll kick off with today's session. So we'd have about 30 to 40 minutes to go through the questions we've collated, and then would have, if we have some time, because this thing tends to take a lot of time, but if we have some time, we'll take additional questions, and probably during our next session, we can answer more questions. So I would start with the first question. So at a high level, and because we've heard there's been a lot of rumors, there's been a lot of speculations and a lot of news in the media about the new tax regime in Nigeria. So what has fundamentally changed with the new Nigerian Tax Act now applicable in 2026, and why should the average employee or small business owner care about taxes? Most Nigerians don't care about tax, but it seems like everybody needs to care now about tax. So I think I'll start with Sister Dami first.
Okay, thank you very much. So what the Tax Act has done really is majorly an harmonization. So prior to 2026 or prior to the Nigerian Tax Act, I think we had maybe like 26 different acts talking about different taxes in the country. So the first thing that the act is supposed to do is just harmonize everything into one document so that once you pick it up and you want to know what things about taxation in Nigeria, so it's a one-stop shop basically. So it doesn't really mean it's a new tax act. It just means that we've taken everything we've had, we've made some updates to consider, times have changed. There's some acts that, for instance, I think the Stamp Duty Act that we had was formed in the 1970s, and so you had penalties of like 10 kobo or 20 naira, for instance. So just to bring things up to speed as we have it in 2026, and also just to harmonize everything. So that's really the first thing that the Act is trying to do. So it's not particularly new, not that everything in the law is a change. It's just bringing things up to speed and harmonizing everything. And so if we say the Tax Act, what are the changes? I think first of all, things that impact employees would be the personal income tax. So the rates have changed. I think there's some questions about that might come up. So maybe I won't go in depth into it, but there have been rate changes, and so that impacts employees. For foreign companies, there has been changes to how their taxation is done. So previously, the law that we have didn't quite consider businesses, online, digital businesses, and all of that. So what the law has tried to do is bring in some provisions that help to pull all these foreign companies into the tax net, because what you find is that a lot of companies come into Nigeria, do business, and take out all the money. So they're trying to ensure that Nigeria gets some of that money before it leaves. Also, just kind of simplify taxes. So there's a lot of taxes, especially in the corporate space, that companies had to pay. So what the law has tried to do is streamline some of them, merge them together, so that companies aren't having to focus on too many administrative tasks. So I think that's really what are the big changes that have come into the act. And so for employees, like I said, the focus is majorly for personal income tax. How does it affect my pay? Am I getting paid higher or lower? And then for businesses, for small businesses, what it has done also is to introduce some exemptions. So really what the law is trying to do is help businesses that are still coming up to come up to a position before they begin to tax them, and for employees or for individuals that earn a certain amount, kind of reduce their tax burden until such a time as they begin to earn large amounts, and then they begin to tax them accordingly. So I think that's just a high level overview as to what the act is here to do, basically. Thank you.
Okay, thank you, Ma. I think what you said at the beginning about it not being a new tax act, but being more like a harmonized version of all the taxes and all the tax laws that we had before. I think that should maybe bring some comfort that it's not some new tax rates, it's not some new tax not some new tax liabilities. Okay, so I think I'll just move on to the next question, and Brother, please, you would help us with this one. So it's a bit of a controversial one. So we've heard that some people say that once you have a TIN, the tax identification number, then that means that government is monitoring every transaction, because now it seems like everything, your bank account, anything you want to do now, it seems like you have to provide your TIN. So can you explain what really is a TIN? What is it really used for? And is it something that individuals or small businesses should be worried about?
All right, thanks, Timmy. Yeah, so ATIN is like a unique number, unique identification number for every business. So that's the number that enables you comply with taxes in the country, right? So that's the number one reason why you need a TIN. So the requirement to set up a TIN is not new. Like Dami had said when she started, this is a harmonization of previous laws. So this was introduced in 2020. So it's not something taxpayers should start worrying about, because it's been in place for about 6 years now, and there has been no I've not experienced an instance where the tax authorities has used that to take advantage of the taxpayer over the past 6 years. So things are not have not really changed in this regard. It's just that I don't know where this is coming from around what the government is monitoring you or whatnot. Obviously, it gives them access to your transactions, but I must say that the government does not have the right to take tax from you. You are the one that pays tax. So tax is paid, is not taken by the government, right? So when you've done your self-assessment, you are the one that will now go to to the tax authority, submit your returns, and you can now have discussions with the tax authority as to whether what you've paid is sufficient or not. But the TIN is not like a witch hunt or anything negative to the taxpayer. It's just to enable you comply. So if you're a law-abiding citizen and you want to comply with the laws, with the tax laws, then you're expected to have a TIN.
Okay. Okay, thank you. Thank you very much, sir. I think something we can like those for us listening generally do is as we hear our speakers speak, let's just take note of those things that would allay our fears. I think a lot of us believe that the tax authorities are out for us. And like Bradari just said, the government doesn't take tax. We are the ones that to pay our taxes. So if you do not have a TIN, I think you should have some comfort as to what a TIN is all about and probably register for one or try and get one. So I'll move to our next question. We have many Nigerians that fear that bank transfer bank transfer narrations may trigger tax deductions. So does the bank narration really matter? Do I have to state why I'm sending money to my sister? And then can banks deduct tax? I think you sort of answered this, but just to read it out, can banks deduct tax directly from your account?
Okay, okay, another interesting question. All right, so first thing for narration, the reason you should put your right narration is not even tax. There's a common thing I say is, or we say in consulting, business comes before tax. Now, the reason you're putting the right narration is for you to be able to give account of what you've done in your business, right? So if you put a wrong description and you're doing your account at the end of the year, the wrong description you've put would make it difficult for you or whoever is your accountant, to prepare your accounts, and you have to start going back, and it might be a very stressful process, to identify what those transactions are. So the first thing you should have at the back of your mind is your narration is actually for you. It's not because of tax. Now, I've heard of, put gift, put hospital bill. If you think about it logically, right? You're a business. Imagine you have 500 customers. All your 500 customers write gifts and transfer it to you. So the question is, are you are you a NGO? Are you a pastor? Are you a church? What are people? So it doesn't even work
Makes sense.
logically, right? So your bank narration, like I said, is first for accountability. Now, from a tax perspective, it also helps you defend your transactions from a tax standpoint. Now, when you've put the right description, it gives you that comfort that what you've disclosed is right, and whoever is your accountant or auditor can also back it up with your financial statement. Now, is your narration sufficient to maybe pay your tax and to avoid the tax authority coming for you? It's not sufficient because there's still an audit the tax authority will do when they see your books of business. So you could have called it transaction salaries, but you need to prove to the tax authority that that thing I've called salaries is actually salaries. So you need to show things around your payroll, your bank statements, your inflows, your staff cost, and everything that amounts to the amount you've paid as staff cost. So you can call your transaction anything you want to call it, but it does not preclude the tax authority from still finding out what that transaction is for. And the burden of proof is on the taxpayer to justify what that transaction is. So narration does not help you, but put the right narration for yourself, for your accountability, and to help you substantiate in times of tax audits and whatnot. Yeah.
Okay. Thank you, sir. So I think we've all heard what Bradari has said. It's not like it's wrong to put narrations in your bank transactions, but I think just we're trying to understand the purpose for which we are to use it. It's not for avoiding tax or trying to reduce your tax liabilities, but it's just for your own accountability. And when you have to report, where you have to to file your tax returns, then you would need that to explain further. And like you said, you can't be a business and be receiving gifts every time. You're not a charity, you're not a charity organization. So I would move on to the next question. I'll just have either of our speakers answer. So for salaried employees, what has changed with pay obligations. That's the pay-as-you-earn obligations applicable to individuals. On that, so what has changed under the new reforms? And on the other hand, what should employers be particularly careful about?
Okay, I think I'll take this one. Dami has been talking for quite a while. So, with regards to pay, what has changed? I think the first thing that have changed that companies need to know about is the rates. So before the the first band for payment, so there's the income you earn, and there's some deductions that are liable. So after you take away the income less the deductions, you have an amount that which you excuse me, on which your tax is calculated. So that amount on which your tax is calculated used to go through a band of payment. So what the law would say is that the first 300,000 that you earn, tax it at 7%, the next 300, tax it at 9%, and on like that. So that was the band, the progressive band that we had previously. So the first thing I would say that has changed is the rates. So that first 300, next 300, next 500 doesn't apply anymore. There's a new band that starts from 800,000. So what that means is that the whatever you earn in a year, so this band is majorly calculated or it's for a yearly calculation. So that means out of whatever you're earning, after we've taken out your income, less allowable deductions, the first portion of your money that we tax starts from 800,000 and then goes down the different bands. So that's the first thing that has changed. The rates have changed. And so with respect to that band, what has really happened is the government is trying to focus tax on the rich. I'll put rich in italics to say focus on the rich and give some breathing space to, for lack of a better word, the poor. So if you're not earning as much, what you find is that depending on what you're earning, for some people, the taxes will reduce. And so compared to last year, they'll get more money for some people again. So for low income earners, you find that you are not paying as much tax as you used to be last year. So it's not as if everybody's going to start paying more taxes. If you're a low income earner, you pay less taxes. If you're a high income earner, you pay more taxes. So that's what the new rates is trying to do, reduce the tax burden on the low income, focus it on the high income earner. So that's the first thing that has changed. Second thing that has changed is we used to have something called consolidated relief allowance. So what that means is that, like I mentioned, you have your income and then you have your deductions. So one of the deductions was called consolidated relief allowance. So it's just so it's 21% of your income less some expenses. And so what that meant is that it would reduce the portion of your income that is liable to tax. So that has been taken out. That's another thing that has changed. So if you were a business that used to calculate taxes considering the CRA, you need to know that that's gone now. And then the new thing that has been included is rent relief. So rent relief is a portion of the rent that you paid, you get a portion of it as your relief. So some people say that the rent relief has come to replace the CRA. Not, but I wouldn't put it that way, but I'll just say they've taken out that relief, they've brought in a new one. So for companies, what you need to do is pay more attention to the rent, take out CRA and notice that the band has changed. So I think that's really the major things that companies need to focus on.
Okay. Thank you, Ma.
Thank you very much, Ma.
Yeah, so I think I'll just quickly go to our next question because it touches on the rent relief you just mentioned. So the next question is, can you please provide some clarity around the additional incentives or let's say tax deductions that can be done for personal income? So essentially, what are the other incentives that salary earners can use as a result of these tax reforms?
Okay, thank you. So with regards to rent relief, let me just quickly mention. So what the law says is the rent relief you get is the lower of 20% of the rent that you pay or 500,000. So what that means is that, for instance, if your rent that you're paying is 2 million, 20% of 2 million is, I think that's 400,000. So you get 400,000 as a relief. But let's say your rent is 5 million as an individual. 20% of that is, I think, 1 million. Yes. But in that case, you don't get 1 million, you get 500. So 500 is the cap. Nobody can get a relief higher than 500,000, but you can get lower if your rent is 20% of your rent doesn't meet up to 500. And so for businesses, I think one of the things that is important for you to do is get rent receipts from your employees. So if you have an employee or as much employees as you have, you can get the rent agreement or the receipts from their landlords confirming. It also has to state their name. There's been a lot of conversations to say, okay, my wife is paying or my husband is not paying. So can I claim? Can he claim? Unfortunately, the circulars or the guidelines from the tax authorities haven't been released yet. So I can't really say, okay, if your husband is paying, then you can't take it, or if you're taking it, your husband can't take it for married people. But what is important is that the law says for any relief that you're taking, you need to have proof. And so the proof that you have is your rent agreement that states the amount of the receipts that you've paid. And it needs to clearly show your name, because if it doesn't show your name, that means that you're unable to claim that. Or what that means for the employer really is that when and if the tax authorities come for a review, and they find that you've granted the relief to someone that didn't provide you documents, or the documents that you've provided don't tie to the relief that you've granted with respect to rent, then you might have additional tax liabilities. So that's what is all around rent relief. So for other incentives, so like I said, much hasn't changed in the law. It was just harmonized. And so I wouldn't say that there's a lot of incentives or leeways that company or individuals can take advantage of. So like I mentioned when I was responding to last questions, what we have is income, deductions, and then the net is what is subject to tax. So the only way that you can reduce your tax really is to focus on the deductions. So the deductions that we have, apart from this rent relief, is National Housing Fund. So typically, there is a fund. Typically, the National Housing Fund is supposed to be able to give you a loan to get a house or to build a house. We all know how Nigeria works, so I'm not sure how that getting that fund works. So and then the NHF is also is conditional. You don't have to pay into it. So I know a lot of people have stopped paying into NHF. So it's a if you pay into NHF, then you reduce the taxes that you've paid. But then on the other side, the issue is that are you going to be able to get value for that money you've paid to NHF? It's just really taking the money from tax, putting it in the fund, still going to the government anyway. So, but one of the ways you can reduce your tax, if we're speaking strictly, is paying into NHF, and then you can maybe also seek to see if you can get some kind of loan to be able to get the house mortgage and all of that. Another way is through pensions. So typically, an employee is supposed to pay 80% of their income to 8% of the basic housing and transport income as pension. But there's also something called, so that one is mandatory. So there's something called voluntary pension. So you can decide to take 50% of your income and pay it as pension. And so you have that possibility. So if you do that, that also increases the deduction that you can have. But the flip side to that is that if you pay pension, you cannot get out that money until 5 years. If you pick it out before 5 years, you pay taxes on it, because typically it used to be about a year, and then trust Nigerians, they used to take advantage of it a lot. They bring it in 1 year, take it out the next year. But the pension commission noticed that, and I think now, I'm not sure, but I think it has been increased to 5 years. So the problem with that is that even though you reduce the taxes you pay in this year, for instance, in 2026, you can't really access that money until I think 2031. So doesn't particularly pay you unless you want to play the long game. Another relief that you have is interest on loans for owner-owned houses. So if you're building a house, for instance, and you take a loan to build the house, like the NHF that I was talking about, that interest that you're paying, it is a liable deduction. So another thing you can consider is, in case there's anyone building a house, you take a loan, the interest on that, you will need to present it to your company, and then they allow you to take a deduction. I think last thing I will probably mention is life annuity. So there's some people that take insurance on their lives for a certain period. That amount also can be used to reduce your taxes. But like I said, you don't get that immediately. So what that means really is that you're playing the long game. So to kind of summarize, there's not a lot that you can take at the moment that would reduce your taxes, because in preparing this harmonized tax bill, they've also tried to block leakages that they knew Nigerians used to take advantage of. So the only way to reduce your tax rate is to play the long game. The long game is that you don't pay tax this year, but you don't get that money until like maybe 5 or 10 years. So that's really what I would say about that. Thank you.
All right, thank you. Thank you so much, Ma. I think that was very insightful. Um, Trying to understand the different incentives, and thank for that comprehensive explanation on the rent relief. And just to do a quick recap, we have to ensure that we provide, in case of employees, we provide the employment, the let's say tenancy agreements we have or receipts that we have to the finance teams or whoever is responsible for tax in our organization, so that we at least get that relief and it reduces our tax liabilities. And I think for business owners as well, we could also think of putting a structure in place. But let's remember the point you mentioned: the receipt has to be in your name, and the address has to be clearly stated. Basically, you just have to be able to prove that that's actually where you stay and you're entitled to that relief. And the point around pension contributions to the National Housing Fund, sorry, I took some notes. Owner loaned houses and then life annuity, we have to also take note of that. I think the pension is very interesting. I think I'll try the voluntary contribution. I mean, the money will come back to me. It might just take a while, but the money will come back to me. But so those are things we can consider. So we'll take another question. We're getting close to our timeline. We'll take another question. Uh, so there are lots of conversations, and this is for companies. There are lots of conversations around the 100 million turnover threshold for small companies. But what exactly qualifies as a small company, and what practical and what does that mean for the company in terms of value-added tax and company income tax? So how does being a small company, is it a benefit for a company to be a small company in terms of VAT, in terms of company income tax, or it just doesn't even matter?
Okay, thanks. I'll take that. Yeah, so when I say it's a benefit from a business perspective, do you want to be termed a small company because of the threshold? I mean, you want growth for your business, so
Yeah.
I'm sure over time you will be tired of being called a small company. But from a tax perspective, so previously, Dami had mentioned it was a harmonization, but there were some changes, and this is one of the changes that was made. So previously, the threshold for being called a small company was 25 million naira, and what it granted you, or what it gave you, was exemption from paying corporate income taxes and value-added taxes. So you won't pay, but you would file. Now, what the new tax act has done is to increase that threshold from 25 million to 100 million, right? So still the same application. So you're not paying CIT, you're not paying VAT, but you need to file your returns with the tax authority still. So what that means is, for CIT purposes, for the financial year where you've had transactions, when you've determined your profit, your taxable profit, your tax that will be payable will be 0%. So no matter what your profit was, you won't be paying tax. So the entire amount is left in the company, right? So that's like an incentive to businesses, to small companies, to take advantage of. So no CIT for such companies, CIT and education levy. So in the past, aside from CIT, companies income tax, there used to be tertiary education tax, NASENI, police fund, IT levy, and the likes. So all those have been harmonized into one levy called economic development levy, which is 4% of your accessible profit. So if you're a small company, you're not required to pay CIT at 30% or the economic development levy at 4%. Now that's for CIT. For VAT, you are not also required to pay VAT if you're a small company. You're not required to charge, you're not required to pay VAT. But you should file your returns as at when due. So your CIT will still be filed 6 months after your financial year end. Then for VAT, your VAT should be filed 21 days after following the month of the transaction. But you won't be required to pay anything to the tax authority. So those are the exemptions you get for being a small company. And let me just add, I forgot to mention that for a small company, it's 100 million naira in revenue plus 250 million in fixed assets. So it's both of them. It's not one or the other. So you must have your revenue should be 100 million and your fixed assets should be less than 250 million. You might look at it like, oh, okay. The mind behind it is, oh, if you have assets worth 250 million naira, which are quite significant, well, this deem it as quite significant, you are expected to be able to generate a good amount of revenue using those assets, right? So that's the mind behind it, as well. Yeah.
Okay. Okay. Thank you very much, sir. I think for that clarification and helping us to understand that small company is not just about the 100 million turnover threshold. There's also the fixed asset threshold. So as much so, but for companies, as much as you're watching your turnover threshold, you also have to consider what your fixed assets value is. So I'll move to the next question and probably our last collated question for today. So for businesses that are not making profits, you're doing business, but you're likely running at a loss. How does minimum tax apply under the new act? And how does self-assessment work in practice?
Okay. Thank you, Timmy. So based on the new act, minimum tax applies to companies that earn turnover above 50 billion and companies that are in a multinational group that has a total turnover. So all the companies in that group have a total turnover of £750. So what that means really is that if you are a company that earns below that threshold as of today, you're not liable to pay minimum tax. So the minimum tax that people were aware of that used to be in the old tax law used to be about 0.005%
Yeah.
of your turnover. That has been taken out in this harmonized act. And what has been brought in is 15%. But like I said, it only affects people that earn above 50 billion or that part of M&Es. So I think for all small businesses and medium-sized businesses, really, that wouldn't apply. So there are a lot of companies actually in Nigeria, minimum tax wouldn't apply anymore. So let me just keep it short at that.
Okay. All right. Thank you. Thank you very much, Ma. Thank you, to Badari as well. I think we've heard a lot and we've definitely learned a lot. I have learned a lot. Probably have some calculations to go and do. Personally, and it's really been an insightful session. So now we'll be moving to our live Q&A session just so that we can ask some questions based on what we've heard and just maybe some questions we've had before the session started. But I wouldn't be doing that. I'll be handing over to my co-host for today, Deborah Adedoyin, and she'll be taking us through the remaining part of today's session. Thank you. Over to you, Debbie.
Thank you so much, Mr. Tim. Thank you, Rodari, Dani. I have personally learned a lot, and I hope we all have. Everyone in the room, thank you so much for staying with us so far. The idea behind this session is for us to bring all of these things around the conclusions and the high sounding tax reforms. We just bring them in so they are more practicable to us. And for those of us either in the 9 to 5 space or in the entrepreneurship space, for those of us who are in all of these spaces, to know how best to apply them to our businesses so that we're compliant 100% and we won't fall victims of the law. My colleague would, fondly say that compliance is cheaper, and it's true. It has proven to be true. So it's best for us that we take advantage of this session, we take advantage of the Q&A parts as well to ask questions, as many as we may have. So I would start with the first question here from Sister Inyoluwa. It says, is self-assessment to be done monthly or yearly? And I think I want to add a caveat to, I want to add an additional question to this. Is there a difference in terms of self-assessment to be done by one who is a salary earner compared to one who is an entrepreneur, and are there timelines to them as well? Should I pick to answer this? Okay, brother, you can go, sir.
Okay, so thanks. So I will take a question first, which is timelines for self-assessment. So self-assessment is a general term for basically saying you're assessing yourself to tax. Now there are different timelines for the different taxes that we've talked about. We've talked about VAT, we've talked about CIT, there's withholding tax, there's payee that Dami spoke extensively on. So all those things, all you do in remitting the applicable tax as and when due is called self-assessment, because you are the one looking at what you've done, looking at your transactions, looking at your business, looking at what you've earned, and determining how much you want to pay as tax. Right, so that's self-assessment. So it varies on the type of tax. So for corporate income tax, it's done 6 months after your year end. VAT, withholding tax, payee, they are done monthly, following the month after the date of the transaction. So that's for the timelines regarding VAT. Now, regarding your question around salary earners and self-employed persons. So for salary earners, the expectation is that your company would remit your payee on your behalf every month. So every month your company is doing that on your behalf. Now, but as at 31st of January, the company, which is the employer, is expected to file what you call an annual returns for the employee taxes for the month prior to that date. So if we're in 2026, the employer is expected to file an annual returns before the end of by 31st of this month at the latest to the relevant state tax authority for declaring the taxes paid for the prior year, that's 2025. That's for an employer-employee situation. The payee is paid monthly, like I've said. Then the annual returns is like a declaration of what I've done in the prior year. Now, for a self-employed person or a business owner, his timeline is 31st of March. So he's expected to look at the income he has generated from his business activities as an individual or sole proprietor or partnership and remits his taxes and file on or before 31st of March of the following year. That will be this year for last year's transactions.
Thank you so much, sir. Thank you. Sister, I hope that answered your question. I would like to take this.
Just to add before
Okay.
you, so that 31st of March that Dario also mentioned, what you're also everyone else is supposed to file. So what the tax authority has said is that companies file at 31st of January, just like he had correctly said, but they also assume that what if you have a side hustle? What if you have a business that you are not declaring? So they are assuming that everybody should file that 31st of March. So if the only income you earn during the year is what you earned from your employer, then you take the exact same thing that your employer filed for you in January, and then you file in March. But if you made any other money on the side, they expect that you should declare it along with what you earned in March. So everyone is supposed to file in March. It's not really enforced, so it's not a very popular thing that is done. So business owners know definitely that their timeline is March, but just to be clear that everybody is supposed to file in March. So even though your employer files for you in January, it's still expected that you in March file for yourself, adding any other income you might have earned. So I just wanted to add that.
Thank you so much, ma'am. Thank you for that clarity. I hope that's clear to everyone in the room as well. I'll take this one from Sister Kalatu that says, is the rent really per couple or per individual? Sister Dami, would you take this?
Yeah, and I think I had said previously that the clarifications are not
Okay.
clear. So what the law says is that we should expect a guideline that would speak to the details. Because right now we've had a lot of deliberations. Can I say Mr. and Mrs.? Should I say Mr. Femi and Mrs. Joy? Does that mean we can both claim it? Are we claiming half-half? Are we both claiming full? It's not clear. So we're hopeful. There's a lot of there's some issues with the tax laws that we're hoping will be settled soon. So once that is settled, we expect that there'll be clarifications issued. So, but I think at the moment, what companies are just doing is if you can give me a receipt that has your name, then I use it. So until they get a bit more clarification about how the couple dynamic works, I think they're just focusing on the name of the receipt and utilizing it that way. Yeah.
Okay. Thank you so much. I laugh because I could relate to that question. Kind of had that discussion in my house, and then all of us were like, all of us need to submit each, Thank you so much for the clarification. So we have this other one that says, does the exemption of small companies affect business names and partnerships? Pradhan, do you want to take that, sir?
All right, thanks. Yeah, so it's small companies, so it's a company. Individuals, partnerships, business names. So that exemption is towards companies. Now, for an individual, for a partner, the exemption you have is what Dami had mentioned, which is the band of 800K. So if you don't make an annual income of up to 800K, then you do not pay, you don't have to pay anything or pay as the case may be. But the exemption for 100 million is for companies, not individuals or partnerships.
Okay, thank you so much, sir. Next is from Sister Yanisi. It says, for individuals that contribute to rent apartments, trying to... Okay, let me just read it up. I just wanted to be sure it's not
That's what
the
Dami
same.
just responded to.
Okay. Okay.
So
So I'll go on to the next one from Sister Omoni. Please, is the turnover requirement for small companies now certainly 100 million? As I recall in an article online stating it's 50 million and fixed assets of 250 million as seen in the Gazette, which is publicly available. Thank you. So I think she wants to clarify.
okay, thanks.
Please.
So
Thank you,
as
sir.
of last year, there was a gazette that was brought out by the tax authority, which was 50 million for small companies and 250 million. But early this year, they released another gazette, an updated gazette that updated that from 50 to 100 million with a ton with the fixed assets of 250. So the correct is 100 million and 250 based on the most recent gazette by the tax authority. So
Okay. Okay. Thank you so much, sir. So I want to add to all of these. Is there, because I know there has been like a lot of news around all of these, new changes within the tax space. Is there, or can you recommend any channels or um, maybe persons to follow on social media that people can get actual, correct, accurate news from, so that we are not just doing hearsays up and down. Are there any places you would recommend, or would you just say we should just wait and get updated as time goes on?
yeah, so I would suggest then Dami can come in, right? So I know the tax policy, the head of tax policy has been doing a lot of interviews where he has been providing insights. So you can also follow the head of that style where you can follow him on LinkedIn. He comments a lot on what's happening and you can get insight on that. Also the tax authority, the NIRS's website or the NIRS's platform on LinkedIn, you can also follow that as well to get authentic information. Then you can also follow a couple of the big fours as well, because they also provide, or consulting firms. Don't let me limit it to big fours, but I mean top tier consulting firms. They also provide alerts, news as the information is rolling out as well. So you can follow that. But Taiwo Idele gives regular feedback and updates on the tax acts. So I'll just maybe leave it for Dami if Dami has other
I'm sorry,
suggestions.
let me just interrupt here. So these top tier consulting firms, can we name them so that people are sure?
Yeah. So I mean, you have the big fours. So maybe I can leave it as the big
Okay.
fours. Maybe just if you know the big four. So EY, KPMG, PwC, Deloitte. You can start with that.
Thank you,
I
sir.
think that should give you sufficient information. Then Taiwo Idele, the NRS website as well, the NRS platform on LinkedIn would also give information. Then I can pass it to Dami. I don't know if Dami has. You can follow Dami too for.
Don't follow that way. But I don't have anything to say. As we say, as my brother said, thank you.
Wow. Thank you so much, Ma. Thank you so much, Ma. And I think I see quite a lot of publications from, all of these firms as well, PwC, they're generally available online. Thank you. So we would, because of time, we would only be able to take one more questions from, the questions here. I might want to skip one that I think has been addressed, the one on withholding tax. Or maybe our facilitators can address it as they speak, but I know it has been addressed. But let me take this one from Sister Dewey. Please, what can you tell us about the e-invoicing platform created by FIRS? What do you advise? I'm not sure what scope this is, but do you want to speak to it, Ma?
Okay. So withholding tax, not much change. So in 2024, there was a withholding tax regulation that was released. So that's basically what we're following. The tax law doesn't speak much to that. So with regards to withholding tax, we're still following the regulations released in 2024. So no more changes in the act. With regards to e-invoicing, so basically what the FRS is trying to do, NRS, apologies, what the NRS is trying to do is trying to get real time online access or information about companies. And so what they're saying is that plug your accounting system to our system so that as you raise invoices, as you pay your vendors, we get information, and then you can use that to file your VAT returns. We can use that to confirm the revenue that you're making, the revenue that other companies are making. So there's a whole process about getting your system plugged in. I don't want to bore us with the details, but basically, it's also engraved in the Nigerian Tax Act, and what it's just trying to do is get information. So what they have started with is to say it's still it's a new initiative here in Nigeria. So we're starting with large companies. Large companies are companies that have turnover of above 5 billion. So right now, if you don't have turnover of about 5 billion, they are not getting to you. So the three there are three layers, if I put it that way. Large companies,
Okay.
5 billion. Medium companies, 1 billion to 5 billion. And then small companies will be around that. So I expect that before they get to small companies, it will take quite a while. So that's why I'm just giving an overview to say they want to be plugged into your system. They want to get information as you dispense them, so they don't have to wait for you to make your returns. They can confirm the returns that you filed when they check the information that they have on their portal and everything along that. But doesn't concern small companies now. They're just looking at 5 billion and above. So once they've perfected it with those companies, they'll move to medium and then small. So I think that gives a yes. So the no, it's for everybody. It's for everybody. Everybody would at the end of the day get on that e-invoicing. But right now the focus is on large companies. So once they're done perfecting large, they move to medium. Once they're done with medium, then they move to small companies below 1 billion. So it's not the 100 million threshold that we spoke about. It's the invoicing has a different threshold of below 1 billion. I think that covers. Yeah.
Thank you so much, ma'am. Thank you very much. Sister Dini has confirmed that she understands your response. Okay, so because of time, we may not be able to take on additional questions live. However, we would have another session next week, Saturday by 8 a.m. By God's grace. So we have posted a link in the chat section where we can, quickly fill out every question we have, and we try to consolidate them, towards the next section. In which we'll have Brodari and Sister Dani also join us. Please, or rather, thank you very much, everyone, for joining. Thank you, Brodari. Thank you, Sister Dani. I personally learned a lot. I hope we did as well. But let's please take advantage of the link for Q&A, and we'll ask as many questions as we have. Thank you very much, everyone. We would also post a link, a survey link. Team101 sessions is evolving, and we're also learning, in the process of everything. So we want to hear from you, what you think about these sessions. Are they really addressing topical issues you want to be addressed? And what do you think we can do better? We'll post that on the page right after now. Please help us fill the form. I'll put it down. Thank you so much, everyone, for joining us today. It was very great having you. By God's grace, we'll see you again next week, Saturday, 8 a.m. Bye.
Bye. Thank you very much.